Business owners, knowing the write-offs you're entitled to can truly make or break your business. Let's not wait until tax season, my friends, to get your tax bill under control. Absolutely not. Here are 5 tax write-offs that every business owner needs to know about, especially if you have an LLC. But before we jump in, my friends, I want you to like, I want you to comment, and I want you to subscribe so you don't miss out on any wealth building information. You cannot afford to. So you know what? Let's get after it. Number 1, startup and organization costs. If you established your LLC, you probably had to incur costs to get it done. We know nothing is free. And if it's free, we know it's costing us some money somewhere. So if you established an LLC and you paid a legal service, you paid an attorney, you did some research and had to pay for that, all of that is what we call organizational costs. The cost to organize your entity is a tax write-off, but you want to add to the organization cost the startup costs. How is that different from organizational costs? Organizational costs are the fees to the attorney, the fees to the Secretary of State to register the entity and to get the entity up and going. But startup costs are the costs that you incurred to get your business up and going. Maybe you did a consultation with an accountant. Maybe you got yourself on QuickBooks Online and you had to pay the fee to get QuickBooks started. Maybe you had to go out and do some research. Maybe you purchased a computer prior to opening your doors. So the way I want you to look at startup costs is startup costs are typically those costs that are needed that you have to incur prior to being operational with your business. There's typically a fine line from the date you started business to the date you were operational in your business. That's the way I want you to distinguish startup costs. Let's say, for example, you're going to open up a 99-cent store or a Dollar Tree store, right? Any cost you incur prior to that store being open, prior to being able to do business with your customers, those are startup costs. And your startup costs may have even started prior to you going into business, and it could have been a couple of years before, because maybe you've been in the startup phase of your business and finally decided to operate it and open it to start servicing your customers. So the number 1 thing that I want you to think about as an LLC owner as a write-off is your startup costs and your organization costs. I am just going to keep pounding the whole home office expense. And many of you may be thinking, Carla, isn't it obvious? It's not, because I see so many tax returns, so many clients that are wanting to reduce their tax bill, doing planning, and they haven't even taken the simple write-off as the home office. Now, there's really about 3 ways to take that home office write-off. You might want to take a percentage of the office space that you occupy to the total space of the home. Therefore, if you have a home that's 1,000 square feet and you're using 100 square feet for your office, that would be 10%. So you can do it that way. Or you can do the simplified method where you just take a straight $2,500 as a home office expense, or you can lease a portion of your home to yourself. That third way is a little bit more sophisticated. It'll give you a bigger write-off, but I want you to make sure you're taking your home office expenses and you're not going, oh, well, I don't technically have to work in my home office. Every business should set up an administrative office where you at least do your administrative work. Number 3, car expenses. It really blows my mind of how many of you are not taking your car expenses. And I know the reason why. Many of you have a W-2 job and you have your LLC on the side. It's not your full-time income. But if you're earning income or you're in the pursuit of income, you should take your car expenses that you incur as a result of operating your business. Now, if you have that administrative office set up, like I told you, and you start in your administrative office every day, that's your starting point for your business. And if you have to leave your administrative office to go visit a client, if you have to go buy office supplies, if you have to go pick up something, if you're going out to have a meal, these are all the types of car expenses that you want to be able to allocate to your LLC. No, you're not going to take commuting expenses to your day job. No, you're not going to take commuting expenses that are associated with your business. You're going to take true business miles. And those are truly the miles that you have to incur to run to the post office, to run to the bank, to really transact business. And did you realize that you can use your car for your W-2 job because it commutes you, takes you to work, and you can also use that same car for your business? I don't know too many businesses, my friends, that can operate 2 vehicles and they're still doing their W-2 job. Typically, it's not until your business has really gotten off the ground that you can really afford to have more than 1 vehicle, and you can afford to allocate specifically 1 car to your business. So I want to make sure that you, my LLC owners that are using your car for business, that you are making certain to allocate that expense on your tax return for your LLC, even if you're still in that W-2 job, even if you're still using that vehicle to carry your kids to and from sports or school. You have the right, Code Section 162A, to take any expense that's ordinary and necessary. And for most business owners, having a vehicle and being able to transact business is definitely necessary. Most times when you operate a business, you are typically traveling someplace to conduct business. Now, when you think of travel, I don't want you to think of travel as just getting on an airplane, having to go from one state to the next state. Travel expenses also come into play if you have to do an overnight where you're going to be at least 50 miles away from your normal geographical office. So you want to make sure you get all your travel expenses documented properly. And speaking of documenting properly, Code Section 274 tells you that when you have travel expenses, you have to keep a log. That log needs to state the reason for the travel, and it needs to be business related. Let's not try to put personal expenses in our travel log associated with our business. It needs to be business related. You need to have the date. You need to have the reason for the business, the person you transacted with, or why you went on the travel. You want to make sure you have the proper documentation for the travel expense. If you gassed up your vehicle, if you lodged and stayed in a hotel somewhere, if you had meals while you were traveling, you want to make sure you're documenting that appropriately, because you never want to put yourself in a situation where IRS is questioning whether or not your travel is business related or personal related. If you are an LLC business owner, I know, especially if you're working out of your home, you have equipment, you have a desk set up someplace, you purchase a laptop someplace. If you purchase a laptop in prior years, you can place it in service in the current taxable year. So make sure you're getting all your equipment written off. Anything that you're utilizing for business. Many of us do our content, our camera, anything that we're utilizing. Make sure that you're writing it off on your tax return as an LLC owner, because I can honestly say to you, many of you are not taking advantage of the expenses that you have. That is why it's so important that when you know better, you absolutely got to do better. LLC owners, you got to get your startup costs in there. You got to get your organization costs. You got to get that administrative home office going. You got to utilize your car expense, your travel expense, and your equipment write-offs to reduce your taxes. And here's the other thing. When you know better, and you now do, you also got to like, you got to comment, and you got to subscribe so I can keep you updated on all things business tax and wealth building.